Welcome to the deep dive. Okay, so you've brought us these sources on Alphabet, GOOGL, asking us to really dig in. And the core question you want us to unpack seems to be, well, according to this material, is this tech giant actually undervalued right now? And despite all the noise and challenges, let's get into it. And hey, a quick welcome if you're tuning in from the Stock Talk podcast. Really glad to have you. If this kind of deep dive, really getting into the source material is your thing, definitely subscribe to this channel, The Deep Dive. We do more of this exploration based on what listeners like you send in.
Yeah, and the main source we're looking at today that you provided is this investment thesis. It's dated June 4, 2025. It goes pretty deep into Alphabet's valuation, its strategy, the risks. Our job here is really to pull out the key insights, the main takeaways from this specific document.
Right. And the headline claim, the big thesis statement right up front, it calls Alphabet AI-powered value at a discount. Pretty bold. It suggests, based on their analysis, the stock's trading way below what they think it's actually worth.
Exactly. That's the foundation for everything else in the document.
Right.
Sets the stage immediately.
Okay, so let's unpack that discount idea. Where does the source see it? They point right at the valuation numbers, yeah. Specifically, Alphabet trading at what? 19 times forward earnings?
19 times.
Yeah.
And they contrast that directly with the S&P 500, which is trading higher, around 24 times earnings.
Okay.
And the argument is pretty clear. That gap, that lower PE for Alphabet, is the discount. The source believes the market is basically pricing in too much substantial execution risk, as they call it. And they push back against that by highlighting the balance sheet. I mean, $95.3 billion in cash is significant.
Yeah, that's a massive cushion.
Right, and the cash generation ability. The source flags $36.2 billion in operating cash flow just in Q1 2025.
Wow, $36.2 billion in just 3 months. That really drives home the financial muscle they're talking about. And, this is where looking at the specific source gets interesting. It does mention the Wall Street consensus target, right? Around $199.
$199.14, yeah. Which, from the stock price when this was written, like $169, already suggests maybe 16% upside. That's sort of the average view.
But this source is saying, hold on.
Exactly. They're taking a much stronger stance. Based on their analysis in this document, they see fair value way higher, somewhere between $210 and $230 a share, which implies, potentially 24% to 36% upside if the market starts seeing things their way.
So, okay, the discount argument boils down to PE looks low compared to the market, the finances are incredibly strong, and maybe the market's just too worried about them messing things up, leading to a price this source thinks is just too cheap.
Precisely. It's framed as a mispricing. Market sentiment versus fundamentals, according to this source.
Now, one of those big worries, the elephant in the room maybe, is AI disruption. The fear that things like ChatGPT could really hurt Google search. The source tackles this head on, right?
Oh, yeah, absolutely acknowledges it. They know it's a big factor weighing on the stock.
Yeah.
But then they lay out how Alphabet, from their perspective, is hitting back hard. Not just defending, but trying to lead. They point to stuff like the rapid rollout of search AI overviews, where AI summarizes info right in the results.
And Gemini, their big AI model, they mentioned scaling that up.
Yeah, the source notes Gemini's reach over 400 million monthly active users mentioned across different products, which is huge. Though they do add a little context, noting it still trails ChatGPT's daily users. So, the race is definitely on. And they highlight tests for an actual AI mode on Google.com, like making AI front and center. Plus the enterprise push with Gemini for Workspace.
So lots of activity. But what are the specific advantages the source says Alphabet has in this AI fight?
Okay, this is key to their argument. First, the data advantage. It's massive. Search history, YouTube viewing, Android usage. The source argues this gives them better training data for their models, like a fundamental edge.
Right. Data is the new oil, or whatever they say.
Well,
more data, potentially better AI.
Exactly. Then there's the hardware. Their custom TPU chips. Tensor processing units. The source claims this gives them a real cost advantage in training and running AI at scale. It's cheaper for them to do the heavy lifting.
Better data and cheaper processing, according to the source. That's a powerful combo.
It is. Plus, think about the ecosystem. They can weave AI into Gmail, Maps, Photos, Android places. People already are. Billions of users. And the scale to actually deliver that globally. Very few companies can match it. The source even quotes Sundar Pichai, saying scaling Gemini for consumers is their biggest focus next year.
And they're putting money where their mouth is. The source flags that huge jump in CapEx capital spending, up 43% in Q1 to $17.2 billion.
Yep, $17.2 billion. And the source explicitly links that massive increase to AI infrastructure. They frame it as, look, this is a necessary investment to stay ahead, even if it eats into free cash flow for a bit. Foundational stuff.
Okay, makes sense. Now moving beyond search and AI, the source also seems pretty excited about Google Cloud. Says it's maybe underappreciated.
Very much so. This part of the document is quite bullish. It highlights that 28% year-over-year growth in Q1, hitting $12.26 billion in revenue. The source presents this as cloud really cementing itself as that strong number 3, gaining ground on AWS and Azure.
28% growth on a $12 billion quarterly base. Yeah, that's serious momentum. What's driving it, according to the source? How are they standing out?
Well, the source argues it's their AI-first strategy resonating with enterprises. Deep Gemini integration is a big one. They call out the Vertex AI platform as becoming like best in class for managing machine learning. Plus, having pre-trained models and APIs ready to go, that cuts down development time for customers. And they mentioned superior data analytics as a key strength too.
And it's actually making money now, which wasn't always the case. The source points to that big jump in operating income for cloud, up 142%.
Yeah, a huge jump to $2.17 billion in Q1. The source says this shows the unit economics are really improving. They're hitting scale. It's becoming a real profit center. And based on that, the source project's cloud could hit a $20 billion plus annual run rate by 2026?
Wow, a $20 billion run rate in just a couple of years. That kind of growth story, yeah, you can see why the source thinks it deserves a higher valuation component.
Exactly. It's a growth engine maybe hidden inside the larger Alphabet structure. Oh, and the source also mentions that pending $32 billion deal for Wiz, the cloud security company. They see that as a move to really bolster Google Cloud's security chops, which is crucial for winning those big enterprise deals.
Okay, let's pivot again. Another potential hidden gem the source talks about is Waymo, the self-driving car unit.
Yeah, they put a lot of weight on Waymo. They cite that external valuation, $45 billion from back in October 2024. And since Alphabet owns about 80%, the source calculates that adds like $36 billion in value to Google's stock right now, even before future growth.
$36 billion just for Waymo? I mean, it's not nothing, but for a $2 trillion company, still, the source sees big potential there. What's the evidence they offer?
They point to operational metrics. Over 250,000 weekly paid rides now. Lifetime trips doubled to over 10 million. They're operating in 6 cities, expanding to 3 more soon, Atlanta, Miami, D.C. They also mentioned the Uber partnership as, a potential growth channel.
And safety. Obviously critical. Does the source get into that?
It does. It uses this specific comparison, claiming Waymo's data shows 82% fewer incidents with bikes or motorcycles and 92% fewer involving pedestrians compared to human drivers in similar areas. As per the source, of course. They frame that as proof of their tech maturity.
Those numbers, as presented by the source, are pretty compelling. What about competitive advantages? Why does the source think Waymo will win?
They argue Waymo has a real technology moat. They seem to particularly like Waymo's use of LiDAR, the laser sensor, seeing it as more reliable than just cameras, especially in bad weather or tricky lighting.
So the source favors their tech stack.
That's the argument, yeah. They also point to Waymo being first to offer fully driverless rides publicly in several cities. That gives them a regulatory head start. And the sheer scale of driving over 1 million autonomous miles weekly generates tons of data for improvement. Plus, having Google's deep pockets behind them with that $5 billion extra funding commitment mentioned is a huge plus in a cash-hungry field.
So what's the big payoff potential the source sees down the road for Waymo?
Okay, this is where it gets really ambitious in the source material. They project that if Waymo gets just 5% of the future autonomous vehicle market, which they estimate at $614 billion by 2030, Waymo alone could be worth over $100 billion. So the source sees this as massive, largely unpriced upside for Alphabet shareholders. They also mention things like potential personal car licensing models, not just robotaxis, as ways to juice that value even faster.
Really positions Waymo as a key long-term bet in this source's view.
Absolutely. A major piece of the future valuation puzzle, according to them.
All right, but we have to talk risks, regulation, antitrust. The source doesn't ignore these, does it? It lists the challenges pretty clearly.
No, it lays them out. The DOJ search monopoly case, seeking things like maybe spinning off Chrome or forcing data sharing. The ad tech ruling where Google was found to have monopolized. The scrutiny over those big default search payments, $26.3 billion is the figure mentioned. And potential future rules around AI data usage. It's all in there.
Sounds like a minefield, but the source argues these might be manageable.
It does present that perspective, yes. Strictly reporting their view here. First, the timeline. They argue the appeals process for these things will likely take years, maybe 2-3 years, possibly more, giving Alphabet time to adjust.
So the impact isn't immediate, is the argument.
That's part of it. They also draw a parallel to the old Microsoft case. Their interpretation is that Microsoft adapted, innovated, and ultimately wasn't destroyed, suggesting maybe the market is overreacting now to the potential Google remedies.
Interesting historical comparison from the source.
Yeah, and they even float the idea, purely hypothetically, that something like spinning off Chrome could unlock value. And they mention Google is already making changes, like ending certain exclusive ad tech deals. Proactive adaptation, as they see it.
So the source's bottom line on the regulatory stuff is, the market's probably overblowing it.
That's the essence of their argument in the risk section. They think the fear is disproportionate because of the long timelines involved, the historical precedents they cite, their belief that core capabilities won't be fundamentally crippled, and maybe even that pressure could spur innovation. They also reference recent comments from Judge Mehta in the DOJ case, which the source interprets as possibly leaning towards less drastic remedies than the DOJ initially wanted. Again, just relaying the source's analysis and perspective here, keeping it neutral on the political aspects.
Okay. So underneath all that strategy and risk assessment, the source also points to the recent financials. Q1 2025 numbers looked pretty good, according to them.
Exceptionally good, based on the document. Revenue hit $90.2 billion, up a solid 12% year over year. But net income, that jumped 46% to $34.5 billion, way faster growth in revenue.
Right, 46% profit growth on 12% revenue growth suggests margins are expanding nicely.
Exactly. The source highlights the operating margin hit 34%, up 2 points, calling it among the best in tech. Operating cash flow, that huge $36.2 billion number again. And then you have the $17.2 billion CapEx, mostly for AI, they say, up 43%, but also returning $15.3 billion via buybacks just in Q1.
These are strong underlying numbers presented by the source. How do they translate that into the future, into their price target?
Well, based on that performance, the source projects 10-12% annual revenue growth going forward. They see margins expanding further, maybe to 36-38%, as those big AI and cloud investments pay off. That combination, they believe, drives 15-20% annual earnings growth. And that growth, they argue, supports their $210-230 fair value range. They think the stock deserves a higher multiple, maybe 22-24 times forward earnings, once the market gets less worried about execution and regulation. The source also makes a quick point about the revenue becoming more diversified across search, YouTube, cloud, subscriptions, and other bets, adding resilience.
So bringing it all together, the valuation gap they see, the strength in AI Cloud Waymo, their take on risks, the financial, what's the final call, the recommendation from the source?
It's a clear, strong buy, no ambiguity there. They label Alphabet an exceptional risk-adjusted opportunity. Fundamentally, they argue it's cheap relative to its strength and growth prospects, with risks that are, in their view, manageable.
And just to lock in that price target again from the source.
$210 to $230 per share. That 24% to 36% potential upside, based purely on the analysis and assumptions laid out in this specific investment thesis.
And they also list things that could make the stock price move towards that target. Catalysts, right? What are some of those?
Yeah, they list quite a few. Near-term stuff like Q2 earnings showing continued AI and cloud strength, closing that Wiz deal, more positive Waymo metrics or expansion news, Gemini user growth, even just more clarity or lack thereof on the regulatory timeline could help, they suggest. Longer term, cloud hitting that $20 billion run rate, AI search features boosting engagement, Waymo hitting, say, 500K weekly rides, strong YouTube growth, and ultimately just the market assigning a higher multiple as those fears fade, according to the source.
Okay, so a quick recap of this source's view. Alphabet, undervalued. Markets too focused on risk, underappreciating AI, cloud, Waymo. Regulatory stuff, real but manageable over time. Financials look strong. That's the picture painted by the specific document you brought us. Thinking about everything we've unpacked here from the source, what really stands out to you? What leaves you thinking?
Well, your sources definitely make a compelling case for the core business and those big growth bets in AI and cloud. But looking even further out, with Waymo and maybe other things they mentioned like AR/VR, quantum computing down the line, it makes you wonder, is Alphabet still fundamentally just search and ads? Or are we seeing the very early stages of something? Well, something much more diversified, emerging from all these massive long-term investments. That management challenge, juggling all these huge capital-intensive bets. Maybe that's the real test the market's still watching closely. Disclaimer, This investment thesis is for informational purposes only and does not constitute investment advice. Investors should conduct their own due diligence or consult a licensed financial advisor. The analysis is based on publicly available information as of June 4th, 2025, and may not reflect subsequent developments. Past performance does not guarantee future results, and all investments carry risk of loss.
And that's our time for this deep dive into the sources you provided on Alphabet. Thanks so much for bringing them to us and joining the conversation. We'll definitely be back soon to explore other topics based on what you send our way.